Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in today's free video I wanted to spend some time talking about the technical aspect of Facebook. So Facebook had a big day today. It ended up being down just shy of 2% here at the closing bell, but it had a spectacular recovery from down here at these lows at 115, and it's a good spot to talk about a stock that is traded very technically. So when you come back and you're looking at the 4-hour chart, I'm using the swing low from 104.40 up into what is the current high at 133.50. Generally speaking, the larger the swing, the more importance I will give the 618 retracement inside of it. So of course this was a very considerable swing. That was, a full 30 points almost perfectly. So to have such a sharp pullback inside of that, it's worth noting this level here at 115. We had sent a text out at the beginning of the day kind of talking about that. Okay, so you know that this is an important level to watch, but how do you keep yourself from trying to buy something and then having it just keep moving lower? Well, it's not always perfect, but you can use the close above the high of the low bar. So when you come back into a 15-minute chart after running your support off of the 4-hour, you can see that this is the low bar. The high of that move was at 117.75, and then as we progress on here into the next hour, so right there around 10:30, 10:15, you can see that we finally close above that high. That is what triggers us into this move. We ended up picking up some calls as I didn't really find a lot that I wanted to add into the way of the short puts that I'm still working around 120, and that progresses along very nicely. Then you run, because you always want to keep yourself in check. You don't want to get too hung up on thinking that you've just called the low and everything's going to be perfect. So you run the rally that precedes the decline and the 618 retracement inside of this. So here's our 618 that initially pointed out support. Here's the 618 that called resistance on the way back up. And you can see how both of those were very important levels. So as we hit this, how do you start deciding whether or not you're going to continue to hold it? Go back down into smaller time frame charts and start looking for symmetry here. So in this case, what I was using was this decline that preceded the rally, projecting it from the existing high where we failed from that 618, and it ended up giving us a decent zone right here around 120, not to mention that's a nice psychological area. And with a couple squeezes forming, I am looking for this to continue on to the path to higher prices. Of course, if it would prefer to just mark 120, the short put will be a fine way to play that. For the directional calls that we have out into next week, I would prefer to see the underlying, obviously, stay strong. And then I was also just noting how this gap provides an interesting confluence where if we're measuring this swing high to this swing low, and you measure your 1272 extension, those really start to line up closely there with that gap. So hopefully they'll make it easy for us to hold on to the position. If it ends up pulling back a little bit deeper, we may get the opportunity to sell a few more puts. But when something is moving as cleanly as this was technically, it's worth keeping an eye on intraday for other opportunities, and I thought I would share that with you. I also wanted to make sure that you guys are aware of the next course that Bruce will be doing. This is going to be strategy and live trading. The course is going to be on the 17th, and then the live trading will be on the 21st. So if you like the technical side of things, the Greeks are a fundamental part of that, and there's nobody better to learn them from than Bruce. So if you're interested in that, you'll have some more information at the link at the end of this video, and I will see you at the next free update.